What's going on, everybody? Boris here at your College of Design Studio. There's two documents that I want to put out this week that deal with accounting, so I'm putting together a quick video that is doing an overview of them. And this one is dealing with accounting, basically debits and credits. There's some data, and I'm going to walk you through the worksheets. Everything's filled out. Remember the accounting equation: assets plus expenses equals liabilities plus owner's equity. And let me go over this table really quick so we know exactly what debit and credit in this scenario means. Now, when we think of debit and credit in a marketplace, we think of debit cards, which is cash, and credit cards, which is you're basically borrowing money from the bank, and then you have to pay that money back at a future date. This is not the case here in accounting. Basically, we're talking about increases and decreases, and depending on what side of the accounting equation we're working on, it differs. So, for example, assets, an asset increase, for example, an increase in cash is a debit. A decrease in cash is a credit. For liabilities, it's the opposite. It's a credit for an increase in liabilities and a debit for a decrease in liabilities. Income revenues, again, that's an increase for a credit and a debit for a decrease. Expenses, debit for an increase, credit for a decrease. Equity, capital, for example, owner's equity, it's credit for an increase and a debit for a decrease. And you can see a pattern. Basically, assets and expenses on the left side of the accounting equation. Assets here, it's debits for increases, and the same thing for expenses. Anything on the right side of the accounting equation, liabilities, owner's equity, have a credit for an increase. So here, we apply that principle in this scenario. We're dealing with the hypothetical city of Citytown in the year 2013. And here we have just some random numbers. Cash, $87,000. Debit. So that means that we have an increase in assets or an increase in cash of $87,000. And here's the things that this document accomplishes. The first one is journalize the appropriate closing entries. Second is determining the total beginning and ending unreserved fund balances. The third is preparing a balance sheet as of December 31st, 2013. Now, we're not quite there yet in this year, but this is just a hypothetical scenario. Fourth thing this document does is it prepares a statement of revenue, expenditure, and changes in funds. Fifth one, it creates a balance for the accounting period that ends in December 31st, 2013. And you can see here the different numbers. I'm not going to go through them in great detail, but just notice these two numbers, one highlighted in green, the other in blue. We have reserve for advance to enterprise fund and reserve for encumbrances. So basically, encumbrances, you can think of them as expenditures at a future date. We're encumbered with an obligation, so we owe money to someone at a future date. Let's take a look at the second worksheet here, closing entries. We have appropriations and then unreserved fund balances as a debit, and then estimated revenues, $7,655,000. Let's see where these numbers come from. Okay, so let's remember these numbers: $7,532,000 and then $123,000 unreserved fund balances. C1. Let's go back to the data and we'll look at that. It was $753,000 or $7,053,000 right here. Estimated appropriations: $753,000, $7,532,000. Let's go back to that sheet. And then we have $123,000 unreserved fund balance. Where does that come from? This number comes from the difference between estimated revenues and appropriations. Observe here that estimated revenues, basically the money we receive in the business or in the city, is $7,655,000. We only appropriate, however, $7,532,000 of our estimated revenues, so we're left over with $123,000. And these are our closing entries at the end of the year. We've received an X amount of money and we've used up or dispersed and appropriated Z amount of money, which is less than the amount we received. So we have to account for that money, and we say unreserved fund balance of $123,000. Now let's go through this section quickly. These numbers again come from the data worksheet. And remember those two numbers that we observed, the 105,900 and 55,000. Let's go back to that and check them out real quick. We have reserve for advance to enterprise fund and reserve for encumbrances. So basically, it's not encumbrances. It's not that we have expenses, but we're reserving $55,000 to deal with expenses and encumbrances as they occur throughout the operating cycle of the city. So going back to the second sheet here for closing entries, we plug in all the numbers from our data tab. We crunch the numbers. Our beginning balance is 192,000 right here. We carry it over again, total beginning fund balance. So we're calculating the total beginning fund balance, which is the amount that's reserved for the enterprise fund plus the beginning balance at the beginning of the year. The ending balance is, we close all the account, we close the operating account, the encumbrances, transfers, and all that. We get $320,000. We add in our reservations for advances to enterprise fund. We add in our reservations for encumbrances and expenditures, and we get this number here. And we'll see those numbers later on in this worksheet. Now let's go to the third tab. That's the number right here, 481,000 closing entry, which is the total ending balance, and total liabilities and fund equity is 807,000. This number is a total fund balance, which is what we expect. And this is the balance sheet for the hypothetical city of Citytown. Notice here, cash, we have $87,000 increase. Short-term investments, $55,000 increase. Right here, line number 7, taxes receivable, current, less allowance for uncollectible taxes. So for example, the government tries to collect taxes. Some people don't file taxes. We have to estimate, every year they have to estimate the percentage or the portion of people that are not going to file taxes. And then they have to estimate how much revenue is going to be lost due to non-filing or different reasons. So for this city, the estimated allowance for uncollectible taxes is $18,000, and we subtract that from taxes receivable. Businesses do that for bad debt. Say, for example, somebody purchases something on a credit card. That's a promise of payment for a future time, so the business makes that transaction. Say, for example, you're buying a washing machine for $2,000 and you buy it on a credit card. You can buy the washing machine at that time. Say, for example, you get laid off or something, an emergency happens and you can't pay that bill on the credit card. Well, that company is not going to be getting that $2,000. And this happens depending on the rate of bad debt. It can be 1% or 4%. So businesses make an allowance for bad debt, for money that they're not going to be able to collect from accounts payable or accounts that are payable to them from customers and clients. And again, you can go through this in detail. This worksheet is available on our collegeofdesigns.com/feed, and I believe the document link is called Accounting Debits and Credit Example Work File. This last sheet here is the operating fund balance, 297,481. Let's go back to the second one. Right here, we check and confirm those numbers match. Total beginning fund balance 297, total ending fund balance 481. We go to the last sheet. Fund balance as of January 1st. It says 2007. That shouldn't say that. It should say, let's fix that, 2013. And fund balance as of December 2013. So yeah, there you have it. This is the beginning fund balance, which matches, and this is the ending fund balance. Revenues. Now we're summing up basically all the different accounts into holistic representations. This is the statement of revenues, expenditures, and changes in fund balances for the whole year of 2013. And we have our revenues minus expenditures, which basically equals profits if this was a company or a for-profit company. And then other financing sources, transfer to debt services, transfer to internal services, net changes in fund balance, and so on and so forth. So this is the first document. Let me show you the second one. All right, this is the second document. It's the Accounting General Ledger and Trial Balance Example Work Document. If you guys like to see a detailed tutorial on this, let me know. But for now, let me just explain how this document works. So notice here the numbers. These are the items that are occurring. These are transactions that took place during 2013, and this is for a hypothetical city of Citytown in the general fund. So let's just do the first one. This is line 19, item number 1. Encumbrances outstanding at the end of 2002 or 2012 were reestablished, $37,000. So at the end of 2012, we have outstanding encumbrances, expenses that we haven't paid, $37,000. Let's go to our journal tab, and right here, this is item number 1. So basically, the number you see here, 1, 2, 3A, 3B, correspond to the numbers you see on a data tab, 1, 2, 3A, and 3B, which I'm actually not seeing here. Interesting. Then there's a quick explanation note. This is usually, I think, something that's done in general ledgers, a quick explanation of what's happening. So reestablishing encumbrances at the end of 2013. Let me change that. There you go. All right, and again, every number, let's take number, what's a good one? 10, 10A and 10B. Reserve for encumbrances, we saw that in the last document. We reserve money for expenses, expenditures, and accounts payable. Those are accounts, I think, yeah, accounts payable. Okay, so purchase order received and recognized. $1 million here for encumbrances, and then $1,006,000. Let's go to the data. Item 10. The materials and machinery ordered in number 8 were received. Bills for $850,000 and $156,000 respectively were also received and recognized. So the sum of these two numbers, 850 and 156, that's 1,006,000 right here that we have. In the third tab, we have our general ledger and our trial balance. Pretty long. These are all the accounts basically. Cash, taxes are they're in order of liquidity. So cash, taxes receivable, current taxes receivable, delinquent, people who pay taxes late. Then we have our allowance for uncollectible taxes, interest and penalties received on taxes, and then allowance for uncollectible accounts, accounts payable. Notice cash is very liquid. I mean, cash, you have it right now. Accounts payable and accounts receivable. Accounts receivable is basically money that's owed to you. You don't have that money. It's a promise of money on a future date. So it's not as liquid as cash or as, fees that you're going to get from delinquent taxpayers. Appropriations, encumbrances, expenditures, and then here we have our trial balance for the city of Citytown for 2013. Everything numbered, cash, taxes receivable, and then here on all these accounts, let's go up here. 5 cash receipts received, 946,000 debit, and we know that means that we have an increase, and then we carry that to our balance. So let's go to item number 5 in the data. Okay, collections were made as follows: current taxes 880,000, delinquent taxes, interest and penalties, accounts receivable, and we sum all that up and we get 946,000. We go to our trial balance and we have $946,000 for cash receipts recorded, and that's the first item that occurs in our cash account. Item number 9, cash disbursements made, $262,000. That's a credit because that's a decrease in cash. We're giving away cash either for expenses or to different departments or for whatever reason. $262,000. Let's go to item number 9 in the data sheet here. Payments were made as follows: accounts payable, payroll, taxes. Grand total $262,000. And voila, we have it right here. And then of course we subtract that number from the number we carried over previously, 986,000, for a running total of 724. And this right here, this balance, our balance, that's what I mean, is running total. And every account is like that. The number corresponds to the number in a data sheet. Both documents are available for free on our website, or collegedesigns.com/feed. If you have any questions or comments, let me know in the comments below this video. And if you'd like to see a more detailed step-by-step tutorial on accounting, general ledgers, how to create a trial balance or a balance sheet, let me know, and I'll put one together for you. It's not a problem at all. Thanks for watching, folks, and I'll see you next time on our College Designs production.